Great. In this video, we are going to look at the account classifications. We're going to review a few notes and we are going to work the worksheet. So what we have as far as this section is concerned, the first step is looking at, so what is an account? So an account is an individual accounting record. It is a record that is for a specific asset or liability, equity, revenue, or expense account. When we look at assets, assets are resources of a company. They will provide future economic benefit. Liabilities are promises to pay future resources. They are an amount owed. Lots of times you will see the word payable associated with your liabilities. And then equity is your owner's interest in the business, or the residual value, really what's left over. So after we paid off all our liabilities, what's left over for the owner. It's also looks at, how is the business financed, because these assets of the business can be financed through liabilities where you owe someone else, or the owner can actually supply the money and information for them. We also have revenues, which is income of the company, and then we have expenses, which is the cost of doing business. So with the worksheet that we're looking at right now, we have to look at each individual account and describe whether or not it's an asset, liabilities, owner's equity, revenue, or an expense. For any other type of explanation as far as what applies for these different accounts, there is a lecture video that is out there that you are supposed to be looking at that goes into a little bit more detail as far as what all these things actually are. So the first thing we look at is cash. Cash does provide us with a future economic benefit. It is a resource that the company can use, which means that cash is going to be an asset of the company. When we look at accounts payable and all, with that, we see that key word I was talking about a moment ago, and that key word is that word payable. So since we see that word payable, we automatically know that that is a liability. The account sales. So sales would be an account where we would put in and record all of the sales that the company has. And so sales in this case would be a revenue account. The next one is rent expense, and this does have a keyword in it as well. It is expense. Whenever we look at expenses, I would say that 99% of accounts that are expense accounts will have the word expense in them. Everything that we are going to be dealing with from chapters 1 through chapter 4 will have the word expense in it if it's actually an expense. Once we get to chapter 5, we do have an account that we'll be looking at that is considered an expense, and it doesn't have that in it. But for our purposes right now, it is going to say expense if it is an expense. Inventory. So inventory is something that we have on hand that we are planning to sell to someone. And so that would be considered an asset of the business because it is a resource that the business has, as well as once we sell it, it will provide us future economic benefit. Supplies expense has that keyword of expense, and so that is going to be an expense account. Next one is service revenue. So with service revenue, we are looking at a revenue item. And so service revenue would be one of our revenue accounts also. Wage payable, keyword there is that word payable. Remember I said before, if you see the word payable, that means we are looking at a liability. So we have capital. When we look at capital, that is that interest, the owner's interest in the business. So it's where the owner makes money, it goes towards capital. If the owner invests money in the company, it goes towards capital. And so that is going to be an equity account. Next one is wage expense. So that keyword there is expense. That means that this is an expense account. This next one is prepaid insurance. And prepaid insurance is one of those items that's a little bit more difficult. When we look at it, prepaid insurance is when we go in and let's say that we have an insurance policy and it's going to cost us, $1,800 for the year for our insurance policy. Insurance policies are normally paid up front. They can be paid for 3 months, 6 months, a year. It just kind of depends. When you go in and you pay that policy for more than just the month that you are in, that is what we call a prepaid expense account. And when we look at prepaid expenses, these mean that we have paid them ahead of time. In other words, cash has gone out, we've paid them before we're using it. And so with that is going to be an asset account because it is providing us with future economic benefit. It is providing us with our insurance for future months. And so your prepaid accounts would be your asset accounts. The account drawing is the next one that we see. When we do look at our drawing account, this is when the owner of the company takes money out of the business. And so that is also going to be part of our equity accounts, because if the owner puts money in or takes money out of the business, then that is part of that owner's equity. Another account we see here is office supplies. So when we look at office supplies, these are supplies that we have ordered, we have gotten them in, and we are planning on using those supplies in the future. And so since we are planning on using those in the future, it would provide us with that future economic benefit. It is a resource that our company has, so that is going to be an asset. The next thing we see is fees earned. So when we look at fees earned, these are fees that we have provided a service for someone, and so we have earned that income from that person. And so that means that this would be a revenue account. Next one's fee expense. Notice the keyword of expense, which means that this is an expense account. We get ready to look at some of the other ones we see here. Land. Land is going to provide future economic benefit for us, and so that is going to be an asset. The next one we see is unearned revenue. So unearned revenue or unearned fees are items that we haven't earned yet. And so they're not going to be revenue until we actually earn them. And so since we haven't earned this yet, this is going to be a liability. This is where someone has given us money to provide a service and we haven't provided that service yet. And so we actually do owe that person the money back if we don't provide that service for them. And so that is why that would be a liability. A building is an asset of the company. Accounts receivable. If you ever see the words receivable, that means that you are looking at an asset. So payable means that you owe somebody money, you're going to have to pay something in the future, that's a liability. Receivable means that you're going to be getting something in the future, and so that would be an asset. A patent is what we call an intangible asset. Other things that we look at for intangible assets include things like copyrights, trademarks, different items like that you really can't touch those particular items, but they do provide us with economic benefit, and so that means that they are assets. Unearned fees is just like our unearned revenues, same exact thing. So it's somebody has provided something, we haven't earned it yet. Until we earn it, it is a liability account. Insurance expense has the word expense, so that means that we are looking at an expense. Here, note payable, keyword is payable. Payables are always liabilities. Your copyright or trademark is that intangible asset item again, because it will provide us with economic benefit in the future. Equipment is also an asset. And then we come to a tricky one. And this one's tricky because it just has the word fees. So when we look at this particular account and we try to figure out, okay, so what is it? So it's not a liability account because it would be an unearned fee if it were a liability, and it'd have that, or it might be fees payable. Would be another account. Those would both be liability accounts, so those are not liabilities. It's not an expense because it doesn't have the word expense after it. It's not fees expense. So we know it's not an expense. And actually what this one is going to be is it's going to be a revenue account. So revenue can be called lots of different things, as we've seen. It can be called sales. It could be called sales revenue. It could be called fees earned. It can be called fee income. It can be called just fees. It could be income from services provided, or service revenue. There's a lot of different things. Fee revenue, or lots of different things that revenue can be called. There's not a set name or title as far as it goes. With liabilities, again, unearned, payable are generally things we'll see. For expenses, you're going to see the word expense. But when we deal with revenue, things can be called a lot of different things. And so that pretty much finishes up this part of the classification. Now, classifications, I do want you to know, are very, very important, because we don't know what statement it's going to go on. We don't know about things like debits and credits and how we're going to journalize. Really and truly understanding the account classification is vital to understanding future items as far as the class is concerned. So just make sure you're going over these classifications, you're reviewing these classifications, and you actually know what all these classifications should be.